Good morning, ladies and gentlemen. So today we gapped up after the dip getting about 2 days back to back, and some sort of exuberance where we are definitely heading the higher end of the range to closer to 16,000. As I speak, Nifty is just about testing 15,900, and the 15,900 straddle is trading for 140 points. Now a lot of people will say yes, in low wicks that's the kind of premium you will get and yada yada whatnot, but more or less from an intraday directional non-directional trading perspective, it's just a really bad pricing of risk. We've had 3 days back to back of 200 point 300 point dips, and then that dip getting completely reversed and whatnot. And with that kind of intraday volatility, this kind of pricing just doesn't make any sense. It's just not very lucrative to take that kind of a trade, which is why I'm very comfortable and very happy not to trade. A lot of people have this thing that you have to trade all the time, and you have to keep consistently trading the market. Not at all. If the conditions don't suit your trade, don't take the trade. I mean, that's the best thing you can do for yourself. Why take a trade that has it's just against you as far as odds are concerned? So I've done a little bit of rolling over of my monthly covered call positions. I've also added a cash secured put where I want to buy Bajaj Finance. So I've added a cash secured put, and I'm scouting trades where I can find high IV to take like non-directional or partly directional trades. And that's more or less what I'm going to do for the rest of the day. Scout for positional trades that have a lucrative, current positioning in terms of being able to enter early in the July series. Now, apart from that, more or less, if this is what the market premium is going to be, I'm just going to wait until it makes sense for me to trade on every day of the week. I'm not taking some kind of a monthly calendar here mostly because I don't have too much to gain from that. I will instead just be able to trade expiries by keeping my margin unblocked, and that should more or less equate to whatever return a monthly calendar would give me, or better than that even. So that's more or less my plan for now. I'm very comfortable not taking a trade. If I mean, we're on Tuesday morning. The time is 10:40 as I record this, and the at the money straddle is trading at 140, 15,900, 140 with the entire Tuesday left to go for trading, the entire Wednesday left to go, and all of Thursday left to go, which happens to be the monthly expiry. So that's just not attractive. Am I going to make a long straddle? Definitely not. That's not my trading style. I'm not going to just switch around being like, okay, it's not attractive to be short, so maybe go long. I don't trade that style, so it doesn't fit into my niche, and I'm going to stay away from it. That's more or less the summary for what I feel currently about the market. I'm going to wait for the right opportunities to come by, and yeah, we'll keep you posted. Thank you so much for watching. And I think if anything, the takeaway here should be people feel compulsion to trade. People feel pain that my margin is sitting around. Like there'll be a lot of people who will make money in these markets, and trust me, they'll make money for years. And people will think they're extremely good traders because they are more or less carrying super OTM overnight trades. So just take your entire margin, sell a super OTM strangle, block 100% of your margin. That will return good amounts of money for a long period of time. I just want to warn though that it just takes one drop of a bomb, one assassination or something, and it's a 10% down move on the index with 50% wipeout on capital. So some people get carried, mix up. It's very easy to mix up um, profitability versus good trading. Right now, somebody could be selling the 15,300 and 16,300 strangle, and they will return a good amount of money by the end of the week. It'll be more than a 1% return in just 2 days from doing that. You can do it with 100% of your capital. That's a 1% return. It's very unlikely, right? Like those strikes going in the money. It doesn't take long for something like that to really blow up. So please be careful with your trades, especially when risk is being priced super low. And yeah, I will catch you tomorrow. Take care.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. Looks like we're opening gap up. I didn't trade yesterday because I was traveling, and so far, from what seems to be the case, we are going to open slightly above 15,800. Should probably be a dip at the open of about 30 points or so, at least as per what Singapore futures are indicating. And yeah, it's been a complete roller coaster in the past few days. We had this initial massive dip, for the second time taking support at 15,600, followed by a big rise, which got sold into. And then we had 2 days of massive selling and a V-shaped recovery back to back. This is generally a very bullish signal because it means that you try to push the market down, found buyers, and the second time, rather than these buyers panicking and further selling off, they again managed to buy the Nifty back up. Looks like everything that played out with the Fed speech was almost artificial in the way that it led to a down move and then got completely negated. So it's been a volatile few days, and also monthly expiries coming up. Now, ideally, the trade I would want to take is about 15,500 and 15,000, 16,100 of a strangle. And I would want at least about 40-45 points in that. I know for a fact I'm not going to be getting 40 to 45 points in that. The way I'm pricing risk currently is basis the kind of random intraday volatility that we're seeing, and that is not being priced in. So there's a high probability that I'll just not take a trade today. You don't have to trade every day. I mean, there are a lot of people. Yesterday also I wasn't trading, so someone was like, why are you not trading? You don't have to trade every day. If you're not getting the best pricing on the trade, then you don't have to trade every day, because the way the market is currently pricing in non-directional strategies, basically a 30 to 50 point move is enough to put you in a mark-to-market loss um, by the end of the day. Even if there's more than a 50 point move in either direction, you most likely will be sitting in a mark-to-market loss. So that being the case, I'll wait and see if it makes sense. Meanwhile, I will scout for some positional trades that I can add, as well as since these positions are going to expire this month end, I will be squaring them all off and rolling them to the next month. So I'll go over some of that as well. We'll keep you posted. The time is 9:10. Looks like we're having quite a strong opening, and Bank Nifty opening above 35,000 as well. We'll keep you posted. Okay, so what I'm doing now is for this week's expiry. Looks like I'll be most likely just trading on Wednesdays and Thursdays on expiry. This is a kind of risk pricing. So I'll be taking a double calendar on Bank Nifty with 34,500 and 35,500 strikes. So this particular trade has 2 days to go for expiry. It's completely hedged in either direction, so max profit and max loss is known. And yeah, just entering this trade. Okay, we'll have to set up a basket through Zerodha. I've just entered this calendar spread, and basically what you have to do in Zerodha is you'll have to sell first and buy then. Otherwise, the strikes will be restricted, and if you try to enter through Sensible, the strikes will be blocked and you won't be able to enter. Just a quick summary of the trade. The trade takes about 30 lakhs, so it's about 8% of my capital available. This is a high risk trade, so I don't want to allocate anywhere close to more than 10% of my capital available. Now, even in the middle portion, this should give me about a 3.5 to 4% return on whatever capital is employed, provided we hold the range of the strikes, more or less. Now, if we head below the strikes, then our actual break-evens on the trade will be 34,300 on the downside and 35,800 on the upside. Now, this looks like suddenly there's a lot of renewed buying in the market and a lot of upside, and PSU banks are relatively strong today. PSU bank index, I think, is up, yeah, It was almost up 2% at one point. So yeah, in all of that exuberance, there is a lot of longs being built up. So yes, this position has a relatively negative delta. It is pricing in the up move that's already taken place and working with the fact that there should not be too much continued short covering. There are a lot of shorts built up at 35,000 as well as 35,500 on the bank Nifty. So that could lead to some kind of blow off move, in which case we'll have to risk manage the call side. But for now, we find comfort in keeping the position as is. So there are quite a few call shots built up at 35, 500, and we continue to see addition. So all that being the case, we'll keep you posted on whatever changes I make. I will not be taking some intraday trade today. It's just not attractive as far as pricing of options is concerned. Okay, time to roll forward the cover on Reliance call. So for those who haven't followed this, let me just quickly go over. Initially, I wanted to take some additional credit on my Reliance position. So I hold Reliance shares, and to cover those, I had sold the 2200 call and sold it at 28. But obviously, Reliance went from 2000 to 2250. And as this call kept expanding at different points, at one point I was trading at 90 plus as well. I sold puts. I had initially sold the 1900 put, then I sold the 2000 put, then I sold the 2100 put, then I sold the 2200 put. So overall, my shares have benefited 10%, and on top of that, my cover on the call has not lost me money because of the adjustments. We're currently sitting on a profit. So with margin requirement going up for stock positions tomorrow, the idea will be to exit all of the monthly positions. So exiting this, it's already in the money by 50 points. So technically, the loss I'm booking on this position is about 30 points alone just on the call. So it's really not bad considering that I would have gained roughly 30 points. Okay. I mean, at this point, you just want the order to execute. Don't care too much about the liquidity. Now the only open position on Reliance is this 2300 call. So basically what has happened here is into the up move, I've managed to cover whatever damage my call was taking by the sale of put options previously. Roughly, I think on the Reliance trade itself, about 30,000 would be the profit. But you have to understand it's not the trade that made a profit. I have about 2,000 shares of Reliance, and each of them have gained about 250 bucks. So that's about 5 lakhs on the shares themselves. So this was just for additional income, but even this particular position is now not giving any loss. ITC, I have a cover at 20, 220, but at the current pricing of ITC, which is below 210, I don't want to sell a call. So even if I sell in the same month, I'll wait for like a rise in ITC till about 210, 215, and at that point I will sell a call. HDFC, I had a strangle, 2400, 2700. Basically given the max profit that it can. There's about 3 points left in this. The reason I'm exiting is this will take an undue amount of margin from tomorrow. It'll take almost, it'll start increasing considerably. So it's just a waste of time to lock up margin there. The return is going to be minuscule. Okay, sold a call on HDFC Bank. Basically closed my, I hold about one lot of shares on HDFC Bank. So I've covered about exactly that. Covered one lot quantity, booked the previous cover and set a new one. What is the basis for setting the cover? Very simple. Generally, depending on whether or not you're expecting an up move, you want to maintain your distance. You look at HDFC Bank chart, for example. The idea here is not super complicated. So let's see on a 1 hour basis. Okay. We have multiple times taken resistance at 15,025. Now 15, I will only look at round numbers. I will only look at 1500, 1600, and so on and so forth. Now if I'm expecting that we're somewhere close to the top and going to be sell off from here, which is not at all the case, then I will sell the 1500 call. So it'll be very close to being at the money. But instead I'm selling 1600 because it's the next round number. And that's how you find liquidities. You can't go to the 20 strikes. You will not find any liquidity there, and you'll get bad pricing. It'll be priced based on hardly much of a bid-ask spread. So that is the idea here. So you look at, okay, recently the entire month, what range have we held? So we've held the range of 15,020 to 14,030. So right now, from where we are, that's about 100 points up and down. I've sold 100 points higher call option. Now, of course, if we start making that call option bleed at different points, I will manage it. But like I said, as was the case with Reliance, at different points, it will be managed in such a way that it continues to retain a negative delta. So that in case there is some kind of a reversal, there is an opportunity to then exit the F&O trade, and because you're going to be losing then on the F&O trade as well as on the shares themselves. Yes, while entering multiple orders, there will be all kinds of slippage, so that will show a market loss. But this is just booking of profit and repositioning of trades. Same thing with ICICI Bank now. I'm going to retain the same strike of 700. It's good that we have a gap updated, and so you want to do, if you're doing covered calls, you want to roll over calls always on a gap up day and a green day, and a day where we're trending on the upside, because that's when you'll get better pricing for call options than you will on other days. And because none of our current covers can have any value with 2 days to go, you're not going to see much of, I mean, something that is 5% away from the spot is not going to have any value at all. It's going to be dirt cheap. You just use that as an opportunity to exit and enter new positions. Okay, that more or less does it. All of our positions have been rolled to the next month. Okay, so one more thing I'm going to do, since Bajaj Finance is slightly in the red, is sell the Bajaj Finance 5500 quote for July. And the idea here is I want Bajaj Finance shares. I want to buy, I add, but I don't want to add at current prices. I'll keep selling the 5500 put until I actually get delivery of the shares, and then I'll actually take delivery of the shares. I'll manage it also by selling some call credit in case there's some big down move in Bajaj Finance as the month goes. But the idea is take this trade, and in case it goes in the money, start accumulating from that point. I do have Bajaj Finance shares. I have about half a lot, so I don't cover an entire lot. This will make me cover slightly more than a lot, and then I will be able to do covered calls on it again. Okay, so that's more or less it. I think the idea should be, don't force a trade when there isn't any trade to be taken. I'm trying to go through the screener to see if there's any trade to be taken. And if you especially want to take credit side trades, you don't want to do it when there's absolutely no fear in the market for uh, anything happening. You're getting a bad deal. You don't sell insurance when everything is going well and there are no issues in the world. The premiums will be far too low. So yeah, thank you so much for watching today. I just rolled over a bunch of my positions. I will keep you posted. Most likely, if this is the case, then depending on the premiums tomorrow, I might or might not be trading tomorrow as well. But we will have to wait and watch. Also, the reason I don't want to just take a positional trade, like one consideration is, okay, so since nothing is happening and IV is low, I can take a calendar spread in the monthly. The problem with doing that is that all my margin will get tied up and I won't have my margin for the expiry day, which continues to remain a very good trading day where uh, the potential ROI on an expiry trading day would be much higher than keeping the margin locked up. So thank you so much for watching. I will catch you tomorrow. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, Use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.